Hey everybody, welcome to Equity.Guru's Gauntlet series. I am Chris Parry, your head gauntleteer. In this series, we try to hold the feet to the fire of public company CEOs. I think if we'd have done this one last week, it would have been an easier job for me than it is today, because Ken D'Entremont from Medexus Pharmaceuticals, MDP is the ticker symbol, just put out financials that it's safe to say make you smile, I think, Ken.
They absolutely do, and I'm glad we're doing it today and not last week, because we can talk to some really excellent results that hopefully alleviate a lot of fears that people may have had in the market.
So your results are, in a nutshell, 23 million of quarterly revenue, which for a $39 million market cap company is would point to you being a little undervalued, I would think. That would project out at around 90 million revenue in a year. So you're running at half annual revenues, stock price wise?
Yeah, less than half annual revenues, because I would direct you to over $100 million in net revenue for this year. Because remember, the numbers we put out today, you're correct, it's 23 million bucks top line net revenue, but we only booked a portion of Gleolan this quarter. Let's assume it's about half of the revenue we will be booking in the future. So You can see that we will very soon be over $25 million per quarter, which will put us over 100 million bucks. And it's not just Gleolan driving the revenue, as we described today on the call. It's also Ixinity, strongly driving revenue. Rupall's up 22%, I think it was year over year. Metoject and Rasuvo are still hanging in there very strong. So we've got a nice broad base of sales and a couple of strong growing assets. So, I think I'm very comfortable with the projection to be over 100 million bucks this year.
And we haven't even talked about treosulfan yet, which if and when approved by the FDA, which we would expect between 1 and 2 quarters away, would bring in, what's the figure that you're expecting on that one?
Yeah, over 100 million. It's 126 million for the competitive product that we compared head to head to, busulfan. And so, they did 126. We've got a better product. So, clearly we think we're going to be in that neighborhood. So, yeah, I think for investors, you're buying a very strong base business, and the bonus you get is the option on treosulfan in the future. And so everybody makes their bet on whether it will get approved or not. I think I've made an argument that we think it's going to get approved. And if that happens, boy, investors will do extremely well.
Now, the knock on a lot of drugs that are going through the FDA approval process is when you get them approved, now you've got to build a sales network. You've got to get out there and start marketing. You've got to raise money, start spending. But treosulfan, the end market is a pretty small amount of specialists, am I right?
Yeah, correct. So we're talking about stem cell transplant centers. There's only about 120 to 140 of them in all of the US. And we already have 6 of 16 people calling on those same centers. So a lot of the spending is already baked into our financials. The only incremental spending will be adding 10 reps. Which is, relatively small number for the size of the opportunity. And a lot of the work has already been done. As I said on the call today, look, the benefit to the CRL is that we've had a year to get prepared, get the market ready for this drug, create awareness for it, start the reimbursement process with the institution. So, a lot of work has already been done. That's why we think, the pickup will be relatively quick. And we'll hit peak sales pretty soon.
Now, obviously, the path to get here hasn't always been, what you'd wanted. The hiccups in the FDA process certainly took the stock down and probably chewed through a little bit of treasury as well when you're making marketing spends for something that unfortunately didn't come around when you thought it would. You've gone through it, but now the stock looks really like it's starting to pick up again and get back to the pre-hiccup levels. Would you say that's accurate?
Yeah, I think that's a good way to categorize it. We've done the heavy lifting already. A lot of the pre-marketing spending had been done in anticipation of what we thought would be a positive decision last year about this time. When it was negative, we quickly kind of restructured, refocused our efforts on organic portfolio, and those efforts have paid off now, added Gleolan, and we're now back, to the pre-decision sort of EBITDA levels that we had before we took treosulfan on, and we have that infrastructure in place. So, we've really completely, changed the outlook for the business over the past year. And, now we've got a path forward to a decision and a strong, base business that, more than supports, I think, price appreciation in our stock.
So you're at a place right now where I guess all the hard work is starting to pay off, and people are starting to realize that, the issues that you've dealt with along the way were not game changers. They weren't company killers. They were just things where you had to go back and get more information. Do you foresee the path forward now being pretty easy to predict? I mean, I know that there's no, forward-thinking statements on whether the FDA will say yes or no, but other jurisdictions have certainly approved treosulfan as is, and putting it into practice. What's your confidence level now that there won't be any more hesitations on the FDA?
Yeah, I think, at the end of the day, treosulfan is an excellent drug and helps save patients' lives. At the end of the day, I think that will get it approved. As you mentioned, every other jurisdiction, it has been approved. In no country has it been rejected. So it's always made it to the finish line. And we believe the same will happen in the US. If investors have questions about, what the clinicians, what the doctors think, I point them to an interview we did with Dr. Filippo Milano, who is a stem cell transplant physician at Fred Hutch in Seattle, one of the biggest transplant centers in the US. And you can hear his perspective on treosulfan and the likelihood of approval. He reviewed the phase 3 clinical study, which has just recently been published. And he, provided his insights as to, why he wants access to the drug and why he thinks his colleagues want access to the drug. So, it's about a 20-minute video. It's very informative. And I think, investors can really get a sense of what we're trying to do here. To me, the FDA is doing their job. They're making sure that the label that we ultimately get is accurate based on the clinical work that has been done. And so I don't think it's a question of does it get approved or not. To me, I think it's a question of, what goes into the label
right.
and, what are the claims we can make in the market in the US.
So a couple of quarters ago, you came out with an adjusted net income of minus 6.1 million. The turnaround in 2 quarters for you has been pretty outrageously successful, considering that's been wiped out. And in doing so with an existing product array, rather than relying on outside products coming in and adding. So what has been, if you could crystallize it, like from the CEO's chair, what were the things that you did with your existing portfolio to change that negative into a positive even before treosulfan comes into it?
Yeah, it's a great question. What we did was, get refocused on a current portfolio, IXINITY in particular. We talked about this channel reset that had a lot of implications in previous quarters. We fixed that. The volume has come back stronger now. And so that's really what we did. Plus the fact that, we stopped spending on treosulfan launch. Clearly that delay, we said, well, okay, let's not spend on that. It's going to be a year from now or 18 months from now. So
sure.
Stop spending there, carried the infrastructure. So we still have the people who will ultimately launch the drug, but we didn't continue the variable spending. And so now we're back to a nicely, strongly profitable business and waiting for a decision. If it's positive, then off we go. We launch the drug and march on to, what I hope will be a 250 million net revenue company. That's the type of potential we have in the current portfolio.
So, and if that one decision can take you, basically over double where you are currently revenue-wise, and you're still sitting on that $39 million market cap. I guess it's probably more today because the stock is up 17%. But
thankfully, it is more today because I think people, have seen, now 3 consistent quarters where we produce positive EBITDA, and we're obviously directing them that we expect this trend to continue. We do expect sequential quarter-to-quarter growth. So I think investors are recognizing the story and the opportunity here that, hey, a really good base business, it's growing, and then you got this option on treosulfan, which if it plays out, it could be a game changer.
The numbers are just great looking at your future right now. But there's, in a general sense, in the Canadian medical space, do you see yourselves as bucking the sector right now?
A little bit. Look, we're domiciled in Canada, but 75% of our revenue comes out of the US. So clearly we're more of a US play than we are a Canadian play. We just happen to have 2 businesses when we amalgamated the company that were based here, so we're domiciled here. Eventually, we do see ourselves transitioning to the US, which probably will mean a NASDAQ listing. Certainly with a treosulfan approval, our revenue from the US is going to go to 90%. And so we'll be heavily focused in the US market. So, our capital market approach would likely include a US listing.
Do you, I know that in talking to people in your company, there's sometimes been a reminder that, hey, we're not a biotech company, we are a pharmaceutical company. Do you think that the retail investor picks up on the difference, that you're not all or nothing on the FDA approval process? You're using the FDA to approve things that have already been shown to work, been approved elsewhere, as opposed to, alchemy?
Yeah, you make a great point. Obviously the history with the CRL would have suggested everybody looked at us as a biotech company. We lost half our market cap in one day, practically. Certainly in a very short period of time. So people, lost sight of the fact that we've got $100 million of revenue. We will not live or die based on treosulfan. We certainly hope it's going to get approved. That'd be a fantastic option to hold. But if it doesn't happen, then we just continue to march on. We keep looking for the next product. Gleolan was an excellent example. Look, we added a product that was doing 12 to 16 million US per year. We think we can grow that, and we did it with very little money. Rare disease, orphan drug, a perfect fit. So investors should think of our business very much as a commercial business. We've got a whole bunch of assets that are generating revenue. We've got infrastructure in place. Every time we add a new asset, we leverage the infrastructure that we already have in place. And at very good gross margins, in the 60% range, a lot of that falls to the bottom line. So in a nutshell, that's our business model. So we're not a biotech company. We don't have any binary events that are going to make us or break us. Treosulfan obviously is a binary event, but we are not just treosulfan.
Sure.
We want it. It'll make a big, improvement in our top line, but we march on with or without it.
Certainly, considering the fact that it's been approved, everywhere else that it's been put forward, would indicate that unless everyone else is missing something that the FDA spotted, that the FDA will get to a place of approving it. Oftentimes, the market looks at that as, well, that could be next week, it could be next year. The FDA could take 2 years to change the label on ibuprofen. But in this instance, you've got a pretty hard stop deadline, right?
Yeah, it's very clear. The guidelines give them 2 to 6 months, and they will determine during which period they make a decision. So the timeline is very compressed, actually. So for investors, this is going to play out between now and at the outside sometime in January. probably before that. Remember, it's up to 6 months.
Right.
So it's not 6 months. It's not like a PDUFA date where they say, okay, this is the date you're going to get the decision. It's up to 6 months. However long it takes them to review the new information that's been put in, that's how long it'll take them to make a decision.
Got it. So anyone who's sitting back thinking, well, Medexus has had a bit of a run, maybe I'll wait, see if it slumps a little bit, may well miss the train one morning in October.
Yeah, I think the momentum has started. I mean, if you see our historical chart as we were moving towards that PDUFA date last time, you can see it's pretty much, a steady climb to that decision point.
No, I always think it's interesting to look at people that have better due diligence than I do when I'm looking at a stock. I think financial analysts that do coverage for a living, but also people who are providing you with the license to sell their particular medication. I think when someone comes in and says, our medication sells $20 million a year in the US, we'd like you to take it and see what you can do with it. That's a massive amount of due diligence that they're doing on you before that decision is made. And to me, indicates something that I should be following.
Yeah, you make an excellent point. So think about it this way. Medac, who is our partner on treosulfan, they are also our partner on Rasuvo. So they saw our capabilities on Rasuvo, what we did with that drug, which was previously their company. Then they gave us treosulfan to launch. And then a company called Photodynamic, or NXDC, their affiliate in the US, gave us Gleolan to relaunch. So these are very positive endorsements that we have the commercial capability to take an asset, a product, and grow it nicely in the US market. Same as the Canadian market. We've done it repeatedly with many different drugs.
The fact that you have a portfolio of drugs behind you that are all out there doing work is a great mitigator of risk, I think. Like, as we mentioned, if treosulfan has another stumble, that it's fine, you're not going under. You're not reliant on any one drug in your arsenal to keep you above the fray. What's the likelihood that we're going to see more such deals to bring a wider array of drugs under your umbrella?
Well, very high. I mean, that is our business model. I mean, we've stated from the very beginning that, our goal is to achieve scale. The larger we get, the better ratios we get, the better valuations we get. And so to achieve that, we're doing licensing, M&A, building a portfolio that's leveraging the infrastructure that's in place. And so we have done, fairly transformative deals every year since inception. And so we think we will continue to do that. As we move towards a decision on treosulfan, that gives us a lot of asset, a lot of commercial capability in a therapeutic area that's pretty attractive. There are other drugs coming in that therapeutic area, and we will have an advantage in that we already have the commercial infrastructure and the experience. And so, that sort of experience brings more opportunity. So as we get bigger, more opportunity comes along.
Sure. We've seen a lot of companies out there that have maybe one or two drugs in their back pocket and have to build out an entire sales network and make that work. But you've already got the sales network, you've already got the contacts. So plugging extra drugs into that seems to be a pretty simple acceleration of your business model.
I wouldn't want my general manager to hear me say this, but yes, it's straightforward. I probably would argue the fact that it's simple, otherwise everybody would do it. Yep. But it's straightforward. The model on how to launch a drug is well understood. If you do your research, you understand how to position that drug, you get the right people in place to execute that strategy, then you will achieve, something close to what you expect. And so it's been done before. We've had lots of experience in doing that. And so we have a team that's done it many times before, and we expect we'll continue to do that.
So in your financials, your EBITDA is basically close to zero. You call it close to break even, which is a big advance from the -7 that it was a year earlier. But might still lead some retail investors to look and say, but financially, does the company need cash? Does the company have enough cash? What is your cash position right now? And do you see yourself needing to raise money at any point, whether or not for treosulfan or otherwise?
Yeah, it's a great question. So the results we put out today, the EBITDA was 1.9 million for the quarter. So, better than what we've done historically. We, reported 7.9 million in cash or cash equivalents, 8.7 in total liquidity. And that's been fairly consistent over the last 3 or 4 quarters. So the business as it's structured today doesn't need more cash. So your question about, okay, well, treosulfan's coming along, what then? Well, that would be a very good thing, obviously. A treosulfan approval, would give us access to capital, whether it be through debt or if the equity markets improve, perhaps equity. So we have these levers that we can pull. Plus, we did announce today also within the financials, and perhaps it kind of got glossed over, but we have pushed out the milestones for treosulfan by 9 months. So they used to be due at approval. Now they're due 9 months after approval. So that gives us a long runway to get the product launched, to get the capital that we would require to pay those milestones. So I think we're in a nice position now. And with a strong base business the way we have, access to capital will be there when we need it.
Certainly that's a healthy thing, especially in a market that is considered a down market, to know that when you need to put your hand out, there'll be plenty of people willing to fill it, especially with the share price going up as it is. You're up, what is it, 50% on the year?
Yeah, something like that. I think we troughed at just under $2, and last time I looked, we were about 290 today. So it feels like we've got that same sort of momentum we had last time treosulfan was ticking towards a decision point.
Yeah, some lucky soul got it for $1.60 a month ago, and now you're touching on $3. So that's a pretty good turnaround. Ken, I know that you've probably had a lot of interviews where, there was a lot of education to be put out there, a lot of things to explain to investors, a lot of, hey, the sky isn't falling. How good does it feel right now to be vindicated over those months?
Yeah, it feels great. When a plan starts to come together and, the promises that you've made, or at least the guidance that you've given people, is happening. It feels good as a CEO. I'm a big investor in Medexus, so I share the pain that everybody feels when the stock declines. I certainly feel the joy when it goes up as well. So I'm feeling, very optimistic as I sit here today, and looking forward to a good 2022.
Just before we go, tell me about the basketball behind you.
Oh, just a fan of the Raptors. We kind of were there for the championship season, and I think that ball is signed by Kyle Lowry, probably the best Raptor ever. I'm sure you'll go down with that title.
Talk about vindication stories.
Absolutely, yes, yeah. That's a success story in itself.
Great. Ken, it's a pleasure as always. And look, I tell you, from an Equity.Guru standpoint, we've been talking about you guys for a couple of months and pointing that good things are ahead. So, your vindication is ours. And we'll all go out and have a celebratory beer on the beach this afternoon.
It sounds good. Thanks, Chris. It was nice chatting with you.
Pleasure always.